Hi, you're back with Zoe Arthurs from Business Basics. I wanted to talk to you about how to set financial targets to make sure that actually you're managing your business effectively, and to make sure that actually you are able to manage those all important revenue and expenditure streams suitably. So we're going to have a look at how you can actually set yourself targets within your business or within your personal finance situation to make sure that actually you are maximising how your businesses or your own personal finances are going to perform for you. So we're going to have a look and sort of look at it in terms of a goal by goal basis, if you like. So the first thing you need to know is actually no business owner knows everything about everything. And that's really important because actually someone may have a specialism in, say, for example, marketing, whereas others may have a specialism in, say, finance. So or a whole host of range of subjects. So it's really important that actually you don't think, well, financial things I know a little bit about, but actually it's one of my weaknesses. At that point, you need to be bringing someone into your business who does have the skill set that you need in order to succeed. So in terms of financial knowledge, delegation is a fantastic idea. If you're not great with accounting, then actually it could be one of the first areas that you consider outsourcing. And quite often after finance, you'll find that human resources is a second, because you will find yourself getting into very sticky wickets if you don't manage those all important relations with employees effectively. So you don't have to keep the books yourself. As I've mentioned in my previous tutorial, you could consider some software such as QuickBooks, which is relatively cheap to use, but also it will just allow you to keep a handle on your own finances and also invoice. So whereas you may not understand how to file your own tax returns, etc., you may actually just be able to use it to keep an idea of where your business is performing financially, so that you're able to adjust costs or increase revenue as and when needed. But financial information and knowledge really is key to your business's success, and it's not an area which you guys should consider overlooking in any means. Perhaps that you're really good at producing your product and selling your product, but if you don't have a really good handle on the finances and the implications in terms of your costs that are coming out of your business, the chances are that you're going to run into some financial difficulty sooner rather than later. So feel free to delegate it. There's lots of outsourcing opportunities available on Google. Have a good Google around and see which ones you think will actually fit the type of business you need. It could be that you just actually need a bookkeeper and someone with perhaps some AAT knowledge, as an example, which is Association of Accounting Technicians. Quite often colleges, local colleges, deliver the AAT qualifications, and then actually people don't do anything with that qualification. So it might be a good idea that you approach your local college and just see if you can get a couple of students who perhaps stood out in the class to see if they want to do a bit of freelance bookkeeping. It could be a good way of just keeping those costs down if you do need to outsource this particular aspect of your business. So financial management is really key. So managing your money means making your money earn its keep, and it's not just about it being sat in your bank account. So never let your money sit idle. Your money should always be working for you. So make sure that you have visited your bank, you've looked at the different types of investment that are available for you, and you're actually reaching the highest possible interest level that you could with regards to your bank, so that it's consistently working for you. And it doesn't matter whether you're working with £100 or £1 million. Every pound or every dollar you make should be working hard for you. So, and this is really important because quite often we all have bank accounts. We're very comfortable with our banks quite often. We don't shop around for banks. Because actually the hassle that it takes just to change your direct debits and things can quite often outweigh actually the financial performance. Well, actually your banks now can action those things for you. So just by shopping around, spending a couple of minutes on your high street and checking the interest rates on different types of savings accounts, building societies and things like that can really make sure that your money is best placed and actually working at the highest possible rate for you, and isn't something that can be overlooked. And just see, obviously, your money for what it is. It is a means to an end. It is a tool. It's not good. It's not evil. It's not the pinnacle of achievement. It won't buy you happiness. But actually, not having a lot won't actually mean that you are a failure at all in any way. Money does come and go. And you will see that when you complete your cash flow forecast. Because actually, sometimes you will have great amounts of financial. So you'll have finance and money in abundance. And other months, actually, you may be running into the red. So So it's a flow. It's about making sure that you manage that flow of finance effectively, and that's how you can manage your business's performance. So if you stop the money from flowing in, your business will soon dry up. I mean, there's no simple way. If you're not making sales, whether it be on your product or service, actually your money will dry up because your outflows will far outweigh your inflows, and that can cause your business to stagnate. So no money means actually your business will fail. And your customers will soon catch on because you'll be unable to pay those all important supplier bills, and actually you may find that your orders are also drying up. So what I just want you guys to think about is consider where you would like to be financially in the short, medium and long term. So are you looking to increase your gross profits, your net profit, or perhaps you're looking to increase your spend per head? So quite often people will say when posed with this question, oh, well, I want to increase my profits. Okay, but how are you going to do that? Is that going to be your gross profit, so your profit before interest and tax and expenses, or is that going to be your net profit, so the money that you have left over? Now, if you're a bricks and mortar business, for example, perhaps you're a shop or retail outlet, maybe you're wanting to increase the spend per head, which will in turn increase your gross and net profit. So quite often, if you're in a newsagents, for example, people will pop in and out for their newspapers and they may top up their electricity or their gas whilst they're there. But if you can increase their spend per head, even by just £1 or £2 by giving them, the option of purchasing a chocolate bar at the till, etc. That way you will see your profit margins increase very, very quickly. And it's a model that's used by a huge amount of businesses. It's about selling add-ons and just making sure that actually the things at the till are there to grasp the customer's attention, so that actually, if you go into Primark as an example, you go to the till, there's lip salve, it's only 50p. Psychologically, your buying behaviour will tell you that that is a good deal, so you pop it in the bag. Now, without realising it, they've just increased the spend per head, which if they do that for every customer that comes into their shop, they're succeeding very, very well. So make sure that you do have those additional add-ons for sale within your business. That will increase that spend per head for you, because actually that is how you're going to increase profitability very, very quickly. So as a sole trader, what you may need to consider is what happens if I become ill and my business suffers a loss. So in order to protect yourself against loss, you may need to consider purchasing an insurance policy. Quite often as a sole trader, you are the only person in that business that can keep it operating, and you still have to meet financial targets. You still have to satisfy customer needs. And it's a really scary time, and it's also very, very lonely. But equally, it can be extremely rewarding. So just make sure that actually if you do become unwell, because we do, or we can't operate, or actually heaven forbid you want to take a holiday, that actually you've got some contingency in place, and that could mean an insurance policy. And these policies just protect you against illness, or if your business faces financial ruin, because as a sole trader, you have something called unlimited liability, which if you haven't protected yourself adequately as a business financially, it can mean that actually they can come into your home and take, your sofa, your TV, whatever it is that you have in your home to satisfy any debt that you may own. So it's really important that you research your insurance policies just to make sure that actually your home life, so your house, etc., isn't going to be impacted by any decisions you make within your business as a sole trader. And that is actually why a lot of people consider the format of their business, and why special consideration should actually be given to the type of format and actually the structure of your organisation, to make sure that actually you are limiting the amount of debt recovery that can take place if you do face financial ruin for whatever reason. So that's covered financial targets. In my next video, we're going to have a quick look at inflation on its very basic format. I hope you've enjoyed that video, and I'll see you soon. Thanks for watching. Bye.